Welcome back, folks. In this video, I want to talk about how to identify the best fair value gap. And this is something that nobody talks about, okay? So every one of my trades is journaled on my Twitter profile, okay, at Forex Recipes. So that's where you'll find where I journal my trades. And most of the time, I also create a video to help you understand why I took that trade, okay? So this is where your education material is posted. The videos are on my YouTube channel also at Forex Recipes, okay? So I want to walk you through a couple of things. What people don't realize is that it's not really the fair value gap that's important. It's actually the time the fair value gap occurred. Okay, that's what's important. Not really the time that it has occurred, but the time the market is going into that fair value gap. Okay, so I want to walk you through. Firstly, let's walk through this London trade. Okay, that I did on Thursday. Right, this London trade that I did on Thursday. So if I go to the London trade, this is the London session on Thursday. Okay, as you know, I typically look for trades in the new hour. Okay, and most commonly it's going to be the halfway point within the hour. So that means it's going to be the 2 a.m. or 2:30 or 3 a.m. or 3:30, right? That is a new hour or halfway into that hour. And it needs to be from the second hour onwards. So London opens at 1 a.m. New York time. So I'm not going to take a trade at 1 a.m. Okay, it's going to be 2 a.m. right in that second hour, or any halfway, or like 30 minutes, or at the next hour, like 2:30 or 3 a.m. Okay, even 4 a.m. Okay, that's the time that I like to see the setup form. Okay, so if we look at the time here, there is 3 a.m. Okay, the market's going down. Right now, I'm looking for. So this is the first time the market showed me its hand. This is all chop before there. Right, this is all. You know, this is 2 a.m. This is 2:30. Just chop, 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 chop. But at 3 a.m. I see nice displacement. We have a number of gaps. So I'm waiting for the market to pull back. Now, is it going to pull into this gap? Right? Is it going to pull into this gap? Is it going to pull into this gap? What's the gap that I'm looking for? There's no difference between this gap and this gap. They're the same. This is a fair value gap. The market would have come up here and continued lower. This is a fair value gap. The market could have come up to here and gone lower. This is another fair value gap. The market could have gone into here and pulled down lower. So what's the fair value gap? That's the best here. Okay. Now, here is the secret. It's about time, right? This here is your 3 a.m. 15-minute candle. Now, I'll talk about why I was looking for a short in a moment in this session, okay? So we do need to have a directional bias, okay? So the 3 a.m. candle starts going down. There's displacement. There's breaking structure, right? This is the first 15 minutes of that 3 a.m. hour. What do we see here? We see it come down. It starts to turn around, okay? That turnaround is happening in the halfway point of that 15-minute candle. What do I mean by halfway point? Well, this candle is going down, and 6-7 minutes into that 15-minute candle starts turning around. Okay, what that does is that creates a pin on the bottom that traders think is a bullish signature. Okay, like this candle here. See how it's come down, right? And then you've got this pin. At one point, that was fully dark candle, and it's turned around at some point, a halfway mark, and it's closed as a bullish candle. That's what this is kind of showing when it's formed. Okay, now here's the beauty. That there is now almost past, well, it's actually past the halfway point of that 15-minute candle. Okay, I want to take my entry inside of that 15-minute candle, okay, at the new hour. And what do I see? I see that is the gap that has occurred after halfway into that 15-minute candle. Right now, that's not a gap on its own. There's a bearish order block just next to that gap and a bearish breaker, making that gap the most highest probability gap. Right, that entire pattern. And time is important. When is that happening? That is happening after we pass the midpoint of that 15-minute candle. What do I mean by midpoint? I mean in terms of time. If we break down a 15-minute candle into minutes, okay, the halfway of that is around that 7 minutes. So this is 10 minutes in to that 15-minute candle. The first minute of that 15-minute candle is at 3 a.m., okay? And this coming to this gap is 10 minutes into that 15-minute candle, which is halfway into that 15-minute candle. So it's not going to be this gap, okay, because that we haven't gone through the midpoint of a 15-minute candle. Okay, it can be this one, but there's no bearish signature on the side of that 15-minute candle. So therefore, this is the most high probable gap that we should be trading off. Okay, and if you look at my journal, that's the exact point that I took my short. Inside of that gap, there is the bullish bearish order block, and the down candle is the bearish breaker. If we mark out the bearish breaker, right, you'll see that it's respecting the midpoint. Okay, so that's what makes that a high probability fair value gap. You know that fair value gap when it's down here. You already know that that's the fair value gap that is aligned with the bearish order block and the bearish breaker, and you're watching time, and you see we've come into that fair value gap at 10 minutes into the 15-minute candle, making that high probability. Okay, ICT likes to short on the candle that's going up. Okay, so we're shorting in strength. Okay, now why was I actually looking for shorts? Let's talk about that. Well, if I go to a 50-minute chart, this here is the Asia session on that day. That there is the London session on the day. At this point in time, we have broken structure. Okay, so this is a move down, broken off swing low. Any pullback is a short. This is now the London session, right? This is 2 a.m. This is 3 a.m. That's the candle that I am shorting from at 3:15. Notice that it comes into on a 50-minute chart, bearish order block, 3 candles down, bearish breaker. Okay, so even on a 15-minute chart, that is the level that you want to short from. If I take this, these 3 down candles, move across, you can see that is the 15-minute candle that I shorted from. Okay, so everything is in alignment. You've got a bearish order block and a bearish breaker on a 15-minute chart after market structure has broken in Asia. Move up on a shorter time frame, as I've shown you on the 1 minute. Okay, we've got the same bearish signature on a shorter time frame at the right time. 10 minutes into that 15-minute candle, bearish order block, bearish breaker, straight into there, into a fair value gap, making that entire setup high probability. Watch my exit, the low of the Asia session. Okay, can I get 50 pips from that? Well, that's a measure it. Okay, so if I take there, the entry down to there, that's over 70 pips. So can I get 50? Yes, right? And that was the trade. Down there's a 10 lot, 46 pips. There was a target on a 1 minute chart. Now, if I talk about, and I have got videos on this trade. Okay, so go back and look at the video on that trade. But if we go back to the 1 minute chart, that target was basically the fair value gap into these lows. That was the Asia low. I don't have to target the absolute best exit. That was an easy target. Under these lows, fair value gap, that was my target. And if I show you how I journaled that, there was a target right there. Okay, there's the lows, there's the target, there's the entry into that fair value gap, into that bearish order block, into that bearish breaker at the right time, straight down. Not only was that an entry on a 1 minute, as a refined entry, but the setup was on a 15-minute breaker structure. Okay, we had a pump up, breaker structure in Asia. That entry, right, we've got a breaker structure on a 15-minute time frame on in the London session. This is the pullback, so you can short up here as well, but I like to see confirmation. The confirmation is when we get down below this swing low here, right, bearish order block, bearish breaker into there. Then I've jumped down to a 1 minute chart and identified the setup, as I've shown you here, at the right time, right? Up, there's the displacement, there's a pullback in the fair value gap, into the bearish order block, into the bearish breaker, bang, down, okay? So timing was what made that the best fair value gap, okay? Let's look at another example. I want to move over to the trade I did on the Asia session, okay, Thursday night, Asia session. This moved down, okay, I took a long from here. So let's go down there. What do we got here? That's Thursday morning. We want to go to, there we go, Thursday night, okay? So again, let's understand a couple of things here. That's actually not the one. That's, that is, I'm looking for Thursday Asia session. There we go, there it is there, okay? That's the one. Okay, so I'm looking for longs. I'm at the front of my charts. This is Asia. The trade that I'm referring to, let's find this in the journal, is this trade here, okay? So this is the long that I took on Thursday Asia session, right, which is at Asia starts 8 p.m. on Thursday night, okay? So look at this. This is 9 p.m. At the hour, we have this reaction. I'm watching this live and I see this. This is moving extremely fast, okay? Anyone watching this live is thinking the market's crashing. Huge candles. Everybody is taking these shorts. I'm only looking for longs, okay? I'm only looking for longs at this point in time. So where are you going to long from? Let's see. We've got fair value gaps, okay? Let's mark out all the fair value gaps. So let me get rid of all these drawings. Here we go. So the market's coming down. You're watching this. Here's the fair value gap, okay? Are you going to long from there? Here's another fair value gap. Are you going to long from there? Right, the market's coming down. You're looking for, where's this going? Where's this going? Okay, you think, okay, there's a whole bunch of liquidity here, right? Let's look for a fair value gap down here. Here's a whole bunch of fair value gaps under these lows. Which one are you going to take? They're all the same, right? Here's a fair value gap, here's a fair value gap, here's a fair value gap, here's a fair value gap. Okay, you might look at this one. It's got an order block down the bottom there, right? That one there. You say, yep, that's a fair value gap. Okay. So is that the one you're going to trade off? It goes straight through there, right? So now we're under all this liquidity. We've gone through every one of these fair value gaps. Even this last one where you got these down candles, it's gone straight through there, right? You're longing here, you're longing here. This is a nice one with a order block. You're waiting now. You've lost here, you've lost here. You've seen it go grab all this liquidity. You've longed there at that fair value gap. You've lost there. Okay, you think now to short. Maybe you start shorting. Okay, here's a nice one under this liquidity. Under this liquidity, so you long that one. Is that the right fair value gap? Which fair value gap is the right one? They all look the same, right? Structurally, this is a nice one. You got down candles that took out liquidity, validated order block, come down into that gap, long. No. Okay, it's not that one. Close out the trade. Maybe it's under these liquidity. Okay, here's a nice one, right? You got order blocks here. You got a nice displacement. That's where that move started. You long from there. No. Okay, there's a lot of liquidity here. This is a nice one. You got order block here, this is kind of where order block down here, up, order block, nice, move up. Under there then? No. So which is the right fair value gap? Okay, you see this one. This is a beautiful one. You've got a low above that fair value gap. That's another nice one. Right? Let's move this one. I've taken this trade. I know exactly which one it was. Okay, I've taken this trade. No, it's not that one either. Right? Okay. Is it this one? This is a nice one. But which one is it? Look at how many fair value gaps we've gone through. Okay. Is it that one? Right? How many fair value gaps are you going to test? 1, 2, 3, 4. There's a whole bunch under here that we saw. Look at these ones. All these. We missed them all. Right? So there's 10 fair value gaps on that move down. Which one are you going to pick as the one to trade? They all look the same. Okay. It's about time. Okay. Asia is the new hour's going down. Right? The best time to trade the Asia session is 9:30 p.m. Okay. 9:30 p.m. So as I'm watching this, I know I'm not going to take any one of these. Right? Because 9 a.m. is going down. Right? My trade's going to be 9:30. It's either at the hour or at second hour, not the first. At the second hour, which is 9 p.m. Asia opens 8 p.m. If it's not at 9 p.m., if I'm not getting my entry at 9 p.m., clearly I'm not. We haven't had any kind of reaction yet. This now is the start of the second 15-minute candle. So if I'm not getting my setup at 9 p.m., I know my setup's going to be at 9:30. Okay? So in that second 15-minute candle, we start having a reaction. Now I know, okay, we've probably come to the fair value gap that we needed to come to because it's about time. Okay? So this one was the one. Okay? I didn't need to know that was the one. I just had to watch the clock. So I jump on a 15-minute chart and I see, right, that's the one. Okay? That's the one that it came down to on the 15-minute chart and order block on the 15-minute chart. So at 9 p.m., right, you can see we've gone all the way down and tapped into this fair value gap on the 15-minute chart. Okay? And taken all this liquidity. And I can see that on the 1-minute chart because that's the one where we had the reaction from. But I'm looking at the clock. I'm looking at time. I'm not ready to enter yet. Okay? We come up into this fair value gap. Okay? And it's 9:29. Okay? There's a 9:30 candle there. I'm thinking, I know that I don't want to short because my bias is to the upside now, right? Because we've taken out the Asia lows that I spoke about earlier. No, this is the next day. Okay, so I'm only looking for longs on this particular day because there is liquidity above, right? So this is the Asia session and there's liquidity above, okay, from the New York session, previous session, right? And I'm bullish anyway, longer term. This is last week, right? As you know, I'm looking for half the week to be taken, okay? So this is 9:30 candle. I'm looking for longs. That is at a resistance level. I can't long there. Okay, what do I see at the bottom? I see a fair value gap. Okay, so inside of the 9:30 candle, what do? We go down into this fair value gap, right? What time do we start to turn around? Halfway into that candle, I want to see us turn around, okay, starting to move in the direction that I want the market to go. Okay, so when this is coming down from this fair value gap, it's indicating to retail traders that this is a move down. They are shorting. They've seen this big, massive down move, okay, and they are now directionally biased to the downside. Retail traders, right? Because they've seen this. So they're waiting for moving to a fair value gap. They probably shorted from this fair value gap. They see we've come into this fair value gap, and they see the market starting to go down, okay, at 9:30. This, at some point, was a dark candle on a 15-minute chart like this, right? Like this candle here on a 15-minute chart. This was a dark candle going down. They're happy. I'm looking for longs. But what do I want to see? Number one, we've come into this fair value gap, okay? That fair value gap is the only one, is high probability because that's the one after 9:30, right? Because I'm looking for bullish signatures after 9:30 or at 9:30. I don't get a bullish signature at 9:30. This is bearish signature. I'm waiting. I know with experience that this candle formation is going to be such that halfway into that 15-minute candle, like 7 minutes in, it's going to start turning around. That's what I want to see. It could have continued going lower, right? Then I would not have taken a long. But I want to see confirmation. So, two things I see. 6 minutes in, meaning very close to the halfway point of that 15-minute candle, we come into the gap. That's the gap that I want to long from, okay? That's the only gap at the order block, okay? All the way in this, there's no other gap I can long from. I'm only looking for longs. I see the candle start to turn around halfway into that 15-minute candle. I'm already long, okay? Let's look at that on the journal. There it is there. I've even marked it out, okay? 2439, which is around there, 2439, okay? I've taken my long. I'm targeting the high of the Asia, right? That trade was closed out, okay? So it's the fair value gap you're looking for, okay? If you want a long on the way down, you're looking for time. Look at all these fair value gaps that all look the same. I did not take any of them. I did not even take the one that it reacted from because it still could have come up and gone down. And I'm looking for time. Where is the 9:30 p.m. fair value gap? It's this one. It's this one. Not that it formed there, right? It's that after 9:30, There's a bullish signature, which is a fair value gap, right, that I'm taking along from. That's what makes that fair value gap the high probability fair value gap, okay? It may not have been a fair value gap for me to take along from. There could be no fair value gaps here, and this could have come down into this bullish order block for me to take along from. So it's not always going to be a fair value gap that I'm going to take along from. It's going to be the bullish signature. That could have been a bullish breaker. That could have been a bullish order block. But in this case, it was a bullish fair value gap that I'm trading from. But the point I'm trying to make is, when you're looking to trade from a fair value gap, it's about time, not the actual fair value gap. These ones that we want to long from, okay, people often try to find, if they're looking to go long at a fair value gap, they're trying to work out, okay, there's a fair value gap here under liquidity, I'm going to take a long there. But no, it keeps going down. Look at all these fair value gaps that went straight through. If this is bullish, why isn't it respecting all these fair value gaps? Okay? Because it's about time. It's about time, not about the fair value gap. One more last example. The trade that I did on Friday. Okay, where is it? Where's Friday? See if we can find it. There we go. Okay, Friday 8:30. So I know that I went long on Friday. Okay, and the New York market, the New York session opens at 7 a.m. Okay, so there's 7 a.m. Okay, before 7 a.m. we're just chopping around. Look at that chop. All of London, we're just chopping around. And what is it actually doing? If I show you on a 15-minute chart, it's just creating liquidity. Look at that. Okay, all it's doing is creating liquidity. So this is 7 a.m. Okay, let's make this bigger. So 7 a.m. there is liquidity above and liquidity below. 7 a.m. takes out all the liquidity below. Okay, so I'm watching 7 a.m. Okay, and that's 7 a.m. And people who are trying to go long, okay, they're looking at this and we're trying to work out where's the fair value gap that I want to, where's this reaching for? We can see it's coming down. Okay, look at that. Is that the fair value gap? Where's this one? Is it that one? Is that the one? You're watching this go down. There's all these fair value gaps here. You're watching this and you're thinking to yourself, what's the fair value gap that's coming down that I can long from? Here's one. Here's a nice one. Okay, this is coming to these order blocks. Let's have a look at this one. It's under all this liquidity. Okay, you get a nice reaction from there. But what happens? It goes straight down. Okay, is it this one? They all look the same. Okay, is that what it's reaching for? Nope, go straight down. Okay, is it this one? So which one is it? They all look the same. They all are, at key levels of the order block. There's liquidity under that one. There's liquidity under that one. Is there one below this one? Is it this one? Right? So look at that. It keeps going down. Okay, so it's not these. Okay, so which one is it? There's all this nice liquidity under here. So, whoops. Is it this last one here? That looks like a nice one. Okay, let's try that. Okay, it is that one, but it still goes down. Okay, so which one is it? Is it this one then? Is it this one? Is it reclaiming this one? You see, they all look the same. So which one is it? Right? That's the one. But how many times are you going to try? Okay, so here is the clue. It's all about time. Okay, it's all about time. It's at the new hour or at halfway mark into that new hour. Now, news was right on 8:30. So if, I wanted to long this, I couldn't wait for 8:30 because then I would have missed it. I had to get in a few minutes before 8:30. But I knew from time perspective, it's got to be a fair value gap close to 8:30. So I'm just watching this, okay, and I'm watching this crawl down. Here's the consolidation. And I'm getting close now. So right there at 8:24 is the last fair value gap I see under all this liquidity, right? So I take my long. I don't wait for it to go into that and close it out. Okay, it could have been this one too, but it's all about time. There's no difference between all these fair value gaps. They are all valid fair value gaps. It could have been any one of those. It's time that makes it high probability. Okay, so at 8:30, let's have a look. I entered the market on this gap, on this down candle, as it was going down. It was completely black. Okay, and that's at 8:24 a.m. Okay, and that is 8:28, 2 minutes before 8:30. Okay. Also, I don't want to wait too long because then the broker charges a very high slippage. Okay, the spreads widen up prior to the news. Okay, so I like to get in if I want to play. If I want to get in and trade the news, I want to get in at least 4, 5, 6 minutes prior to that news release. But this was a sniper entry because I know that it's not about the fair value gap. I'm not going to get in here just because it's a fair value gap. I know that it's time. It's not the fair value gap. All the fair value gaps are valid. It's about the time. So let's find this on my journal. There it is. There. Look at the entry 2456. 2456. I've marked it out. Okay, look at the time, 8:25. 8:25, I got into that trade. Okay, small lot, very small lot. I've managed my risk on this trade, right? I've only traded 1/3 my normal position size because I want to mitigate the risk of the volatility injection. Okay, because we could have wicked 50 pips lower, okay, before that expansion higher. Okay, but I'm trading in alignment with my own risk tolerance. Okay, so that's what makes that high probability. Okay, my entry on that trade was where was it? 2456.59. Okay, 2456. What's the low in this candle? The low there, where are we? That's the low, right? So the low is 2455.95, and I got in 2456.59. So right near the absolute low. Okay, all because I'm timing my entries. I'm selecting the fair value gap not by its shape or its position on the chart, but by time. Okay, so the best fair value gap is going to be at the best time to trade that session. For Asia, it's 9:30 p.m. For London, you've got to have a look at how the market's, how the chart evolving. It's going to be at that second hour, 2 a.m., or at the halfway point of that. So 2 a.m. or 3 or 2:30 a.m. or 3 a.m. or 3:30 a.m. or 4 a.m. Right? You've got to look at what the chart's showing you. Okay, how's the market reacting? Okay, so I hope the video was useful. I want to talk with you in a future video.